Hi, everyone, and thank you for joining today's live stream. I'm Tammy DaCosta with CoinW. Now, we've got a lot going on today, and we are busy discussing, well, our topic for today is the crypto bull trend still your friend? If you were trading the markets yesterday, I'm sure you did have some doubts, and we're going to go through that. I am busy just loading my presentation. Apologize, I forgot to save it and upload it. But while we get into that, or while I do that, I'm just going to talk about what's happening in crypto and in markets as a whole. Now, going into this week, we already knew that it was going to be a big risk week. And that's because we've got quite a lot of event risk and fundamentals that are playing out. As a trader, and especially as a short-term trader, it's very difficult. I studied economics, so by trade or by profession, it was economics, econometrics. And then it was actually in about 2019, well, I got into trading, and then I decided to go more the analytical route. And the analytical route, when I say that, I mean actually more focusing on price action and technical analysis. And that's when I started studying the CMT and to actually learn about the price action. Now, why I'm telling you this is because sometimes it gets very, very difficult when you've got the two backgrounds to put them together. Because on the one hand, you've got all these fundamental events happening and you can see, or we've got these expectations that, okay, it is actually going to impact prices. And then you've got the technicals, and technicals are how markets are reacting. Okay. So once I load this presentation, then we are going to get into, I'm just going to talk about the fundamentals, because I believe fundamentals are good because, yes, they do drive prices, especially in terms of expectations. And that's what this period has been all about. And not only this period, but to be fair, since the election of President Trump. So we've seen that same rhetoric, those same themes that have continued to play out. And a lot of focus has been on the US. And I'm sorry to say, but it usually is. So now let's do this while I can. Okay. Now, but if I can't do this, I'm just going to actually present from here. Okay. All right, let me show my screen. And then we'll quickly talk through it. Okay, so going into this week, we already had a lot of risk events, as I said. And that was because we've got quite a lot that's been going on. We've had from the Trump inauguration, he's now literally been president. Well, tonight will be basically for 8 days. And already, like, there's been a lot that's come in. Firstly, on his first day in office, he is the president with the most, well, the record for signing the most executive orders. On his first day in office, he signed 26 executive orders. Biden was, well, he made the previous record of 9. So that tells you a lot about, okay, Trump, during his campaign, he basically ran the campaign, he promised a lot of things, and now he's basically saying, okay, it's time to put those things in place. Briefly, and you'll know why I'm talking about this in a second, but to talk about what's been happening. So firstly, this week, a few things. We've got the ECB interest rate decision. We've also got the Fed interest rate decision. We've got GDP data. We've got Apple. We've got Microsoft earnings. So those are big drivers. And then obviously this has become a big issue, and that's China and US trade wars. And we'll see in a moment why that actually matters. So if we look at the economic calendar, we see yesterday started out with China releasing their purchasing managing index, and their PMI data was 49.1, below expectations. So what does this mean? That means that the Chinese economy is still perceived to be under pressure, okay? And second largest economy in the world, so it puts pressure on emerging markets and so forth. Then we also had Germany IFO business climate. So this is also to say if, it's going to be positive or negative. It was slightly higher than expectations. But Australia business confidence, we see negative. So we can see overall, there are definitely concerns about the wider economy and the global economy. And that we've been seeing playing out since COVID, okay? And then we had all that fiscal stimulus and that boosted sentiment. So it's literally been a game of, okay, government policy versus inflation and then interest rates. So we've seen the same theme and the same cycle. And this does tie in to crypto now. Maybe before it wasn't as relevant, but now it is. Now, if we look towards the rest of the week, and I'm going through this really, really quickly, we've still got inflation data, okay, consumer confidence. But the big thing, so tomorrow we've got Bank of Canada interest rate decision and the Fed interest rate decision. Now, with the Fed interest rate decision, there's no changes. So interest rates, the Fed fund rates are expected to stay at current levels, but the focus will be on the Fed press conference, which is half an hour later. And that's basically where the Fed chair, Jerome Powell, will discuss his concerns for the economy, and it gives kind of the forward guidance, okay? However, then on Thursday, we've also got a lot of GDP data, including the US, and Friday, we've got the ECB interest rate decision. So the European Central Bank will be announcing their interest rate decision and their economic outlook or their forecast. And then on Friday, we've got core PCE price index, and that's the preferred measure of inflation for the Federal Reserve. Inflation ties into prices, that impacts the economy, that impacts risk appetite, and that impacts crypto. So this is just basically the economic calendar. And then what we saw yesterday, so there was already this event risk, and what we saw yesterday was an absolute bloodbath. And not only, okay, this is today, current, prices, but it is pre-market session for the US. So why was it a bloodbath? Okay, it doesn't look too bad, right? Well, NVIDIA was down 16.97%. That is huge. And I'll discuss why. We also had Tesla, we had Oracle, and we had a lot of these companies that were taking strain. As a whole, when we go to the charts, we're going to see just how much strain they actually took and just how much of a big deal yesterday was. And it wasn't because of the economic data. And yes, prices, I think, did need a correction. So I do believe that technicals did actually come into play. But the big news yesterday was China and the US, and basically it was DeepSeek. So DeepSeek is now China's version. It's an open source network of OpenAI, okay? And this is ChatGPT. We know that especially over the last week, or even in the victory speech that Trump gave, AI was a big theme. Okay, Stargate was announced last week, which is a $500 billion project that is aimed at creating or building infrastructure for AI and data centers in the US. And what this has done is, because if you know that America obviously sees China as a threat, and so they've been trying to keep NVIDIA's chips, or the US chips, that are essential to making or to building this technology. They've been trying to keep it out of China through sanctions and everything. So DeepSeek is now a AI startup. They released a few models last year, and it's their new model that's really the R1 that is a game changer, and it really rattled markets. And why is it? Okay, because AI is so developed. Open AI is so developed, and then we've also got Groks. We've got multiple, AIs in the US, and that was one of the big things that Trump was saying. We are going to be leaders in AI, and China is going to take a long time to catch up without our chips. And now DeepSeek comes along, and they've built this. Well, given the fact that they didn't have those chips that the US has, they've built this basically awesome, kind of ChatGPT kind of thing, and it is a fraction of the price. And that's what really rattled markets, and that's what really stirred things up, because now it was also an eye-opener for China to basically say to the US, now the US has been saying all these tariffs and that, and China's stepping back, and now they released this, and they're like, okay, well, look, we haven't had those chips, and we've been fine. So this becomes important because it's bound to have implications on the trade wars and tariffs, which once again comes into sentiment. Even though this isn't the topic for today, it still plays, in my opinion, it still plays a role. If we go now and we look at the market cap loss, okay? Just yesterday alone, NVIDIA lost $589 billion, okay? Just from this story. And that means, so you had the NASDAQ, so the US tech stocks, and you had the S&P 500, and we also had we obviously also had those, crypto that was really basically falling off a cliff. And it may seem that it's irrelevant, it's not tied, but that's what I'm saying. Things like this, it does basically talk to sentiment, and then we'll look at how the technicals actually come in. So we see gold's market cap, and gold does have a huge market cap, and that's obviously because of the fact that it's still there's still currency reserves, you still have gold reserves, and that's almost like a safety net. We then have NVIDIA, Apple, Microsoft, Amazon, Google, Alphabet, Bitcoin, Facebook, Tesla. So we can see, to put it in perspective, these companies all have a greater market cap than Bitcoin, okay? NVIDIA's market cap was basically the combine of, it's the whole crypto market cap. So one company has the same market cap as the whole of the crypto environment. But it's also important to know the linkage. Now, both AI and crypto are being seen as kind of like the future. It was two very futuristic concepts that 20 years back, majority of people would have been like, are you crazy? Do you have rocks in your head? Or what are you even thinking about, robots actually doing tasks and learning emotions and actually rationalizing and driving cars? And then we have a crypto, so like pretty much we're doing transactions on this thing called blockchain. 20 years back it was okay, it's futuristic, it's insane, and now it's reality. So we have to bear in mind why these market caps are also so important. Now, why I'm talking about this as well is because we've still got a lot of these companies reporting earnings tomorrow, okay? And Nvidia is not one of them, but we do have Apple, we've got Microsoft, we've got Alphabet, we've got Tesla. So we've still got a lot. So the combined total of that market cap places immense pressure on things like US indices, especially the NASDAQ, and even other equities, because now we've got these big techs that are in the top players, and that's why they're part of the S&P 500 and the NASDAQ 100. And then we've got other equities, well, basically the European equities and the markets, and we've seen the same things. So when Nvidia has had positive earnings, we see semiconductor stocks throughout generally following suit. And so it's not only about the US markets, it's the fact that it does have a knock-on effect. So we have to bear that in mind. And it's also important to note that things like the US 100, the NASDAQ, the S&P, they weighted. Okay, so the greater the market cap, the more weighting they have in that index. So I can't remember. I'll go through this tomorrow. We'll touch on it. So it's just important to bear that in mind. All right, so now we get to the good stuff. So if we look at the coins that have gained the most in price, and this is the past 24 hours, okay, these are altcoins, but if you look at them, they basically, a lot of them are the metaverse, decentralized. Okay, we've got NFTs that are gaining again, okay, memes. But now, what is this? So if we look now, we've got the deep book protocol, okay? So we're getting a lot of these that are now coming in, and they're kind of bouncing back after a very dismal day yesterday, okay? Then we see Bitcoin, Ethereum. We see prices today are looking, once again, much better than they did yesterday, because yesterday, literally everything was just red, okay? However, if we look and we see, and now we're going to go to the chart. So even though we look at the selling pressure yesterday, and to be fair, I do think we needed that correction in one way or the other, because of the fact that, okay, there we go. Sorry, let me just gather my thoughts, get my screen. Okay, so that's done. I had my okay, I don't know if you can see it now. Just try this again. Stop sharing. Okay, there we go. So now if we look at the chart, you would know I often use the monthly, and that's more just like a reference. And we've discussed this quite a few times, but we're going to go through it again. So you can see here, Bitcoin prices, they, okay, it is delayed because this is the futures, but it's up about 1.4%. If we go to the spot, okay, well, we're going to be looking at these anyway. So we have the futures, okay, so we've got in 2017, we know that before, this whole, before the institutional adoption, we know that, okay, crypto gained traction, and in 2017, we had it reaching just below 20,000, and then we had the pullback. Okay, and then why I say storytelling through charts is because we've discussed all these fundamentals, and we'll go through it on the other charts. But when there's been that debate between fundamentals and technicals, there's actually benefit in having both of them. So everyone says, oh yeah, but technical analysis isn't proven. No, okay, maybe not. But from a logical point of view, if you look at indicators, and that's where we're going to go into the technical tools, like a moving average, okay? What is a moving average? You've got the different types, but it is taking the average price over a certain amount of time. So this is the monthly. And then if we had to look, so if we go indicators, now let's go to moving average. Okay. If we had to go here, we would see what the exponential moving average is, but I'm going to use the simple. So the difference as well, exponential gives a greater weighting to recent pricing. Simple just gives equal weighting. But now I want more than one, and we'll see why. So we have now okay, I'm going to make this the 12 months. That's pretty much the year. And then we can go to the past. Let's do 6 months. Okay. So generally we'll use different moving averages, but for a monthly time frame, we've got, this means basically this is the average over the past 6 months. And this would be the average over the past year. Now, if we go look here, currently we have that first moving average, okay, and we've got volume. So volume, then we've got the 12-period moving average. So the moving average, the average over the past 12 months is 73,084. We are way above that, okay? Over the past 6 months, 81,634. We're still way above that. If we look though, the 81,634, that level roundabout is already significant. Okay, I know the chart, but when there was that break in Bitcoin, so it was from the week of the elections. So the election date was the 5th of November. The results came out on the 6th, and we got a break in prices. We'll see it on the shorter time frame. So we've already got 2 critical support levels, okay, that we could mark. And let's just do that quickly. Right, and so what we've got here, and the 73,000, so I'm going to be focusing more on the 6 month. So 6, there we go. And this is the 6 month moving average. Okay, now I need to change my coordinates to make sure it's right. And that would be 81,623. Cool. So we've got that. Now, if we're looking, and let's carry on with our story. So in February 2020 and March 2020, we could see volume, or we could see prices were down. Okay. And this, once again, if we're looking here, the candle looks small, but look in the top. It was down in March 2020, 25.7%. And you can see that in the top there when I go to the candle. So 25.7%. So it doesn't look like a big candle. Okay. Now, if you go here, that looks fairly big. And that is because, so if we do that, then we're going to get, well, on the log scale, we will get like a better, because it's basically going to make it in proportion to, accredited terms, but we're not focusing on that now. So let's do this. So in March 2020, we obviously know we've got the COVID pandemic, and, everything is basically, there's fear, there's panic, there's basically just a sell-off. People are getting cut from jobs because there's supposed to be this lockdown for a short period of time, and then it gets extended, and there's more variants. And now March 2020, it's officially a global pandemic. So we obviously see that risk off, okay? And we see that risk off that actually drives Bitcoin to a low of, okay, so this is the futures. So it drives futures basically to a low of 4210, and then we see the close, it lands up closing at 6490. So we've definitely got a pullback and then a slight recovery. Now, what happens in April? So in April now, we've got countries like the US saying, okay, fine, we understand this is a global pandemic, so we're going to start giving, a fiscal stimulus. So that's money pumped into the economy in different forms, like they had, for example, an infrastructure bill. So now they're going to expand, and this was when the economies reopened. But for the time that economies were on lockdown, there was a lot of stimulus in terms of checks and grants that were being given out to citizens so that the economy wouldn't actually feel it as bad. Okay? Throughout this period, we see this huge surge. And what happens here, and we discussed this briefly the other day, countries are saying, okay, actually, we shouldn't have cash, maybe, and institutions are saying, maybe this is a good time to actually start accepting crypto. PayPal was one of the first ones, and PayPal was also who was behind it, Elon Musk. Back in the day, he was one of the co-founders. So we still see a lot of that coming into play. And then we saw Tesla was a big ambassador for Bitcoin. So we see this huge drive, and that's when we got to April 2021. We then had Tesla saying, okay, maybe we're not going to, or we're going to stop Bitcoin as a form of, a payment method. And that was because of regulatory scrutiny, pullback, and then see here, falls to the 12-month moving average briefly, and that was back then, and then rebounds, and then November comes, reaches a high, 69,000, around about. So we've got that, and then the Federal Reserve says, actually, inflation's a problem. We have to start hiking interest rates. Interest rates are now going up. So what happens? We've got a pullback in sentiment. So we've got a pullback because now people are realizing they're going to have to start paying all the bonds and all the money that they may have borrowed during the pandemic at very, very low interest rates. And now they're going to have to start paying that back. So we did definitely get a pullback. And then we attempted to get a recovery. And this recovery, once again, would have been fueled by institutional adoption. And then we get this. And now what happened from here, so this is March 22 high. So at the end of Feb, that's when the Russia invaded Ukraine. Okay, so we see prices testing the 6 month, and then they basically fall. Okay, we get temporary stability at this level, and you can see that because there's no wicks on the candles. We then get a drop over here, November 2022, and then crypto. From then, Bitcoin, it has had its ups and downs, but we have seen those levels of stability. So these charts, once again, can tell the story of economic recovery, of sentiment, and of basically Bitcoin's journey. What has been a huge part of this journey is up until basically here, we still had a very, there was still a lot of concern around the regulations and around crypto as a whole. And so even in July 2023, we still had, even though the economy, the US economy was still strong, we were struggling to actually break those previous, well, basically that resistance, and to gain traction to push prices higher. Now, as soon as October, well, the end of 2023 came, 2024, that is when we started seeing developments in the crypto space, specifically for Bitcoin and Ethereum. And the huge break came in when the spot futures ETFs were introduced. And this is definitely, that was one of the key drivers of the price moves throughout last year. So throughout last year, even though we still had the Fed and we still had higher interest rates, we still saw crypto basically gaining traction because of that institutional and the spot ETFs. So now there's the development in the background, the fundamentals, but we don't necessarily need to know the fundamentals. All we need to know is prices are going up. And even if you use I lie, you do need to know the fundamentals, but maybe not in detail. It depends, once again, on how you want to trade. So if I'm planning on buying and holding, my approach is going to be different. I'm going to use the monthly charts and the weekly charts. I'm just doing this to tell my story, and then we're going to move on, obviously, to shorter time frames. Before we also do this, let me, while we carry on, I didn't add marks here. So remember this one now, check. And this is on, remember, it's also futures charts. So this would be, November 21. All right, and that was 6 now. Spot. I'm going to make this. I remember that was a 6 month moving average. Not necessarily going to mark that. Right there. So that was the March 2022. I'm not going to write the levels. So already here we can see we way past the stage that's of the concerns, obviously, about, okay, how much of a difference or how much, of a way forward does crypto create? So what we see here, so November 2021 high, we're keeping that in mind. The prices recover, and now what we see is we're going to 2024. So we're now above the 6-month and 12-month moving average, and then we see Feb 24. So prices explode, 45.21%. Spot crypto ETF. Okay. Once again, we now have a new, basically in the March, then prices jumped, they surpassed that previous high, and then we saw a period of consolidation. So already here, the fundamentals had been priced in. And this gets reflected straight away in the technicals. Because now, no longer are we thinking, okay, of levels down here, because now institutions are now offering them to pension funds. Now they can actually be part of retirement packages because we've got spot Bitcoin crypto ETFs, well, Bitcoin at that stage. We can actually now have hedge funds like the likes of BlackRock, like, the big players that are now offering it and embedding it in their portfolios. That gives crypto a place. At least it did for Bitcoin. But now we needed a new catalyst. So we had, okay, now interest rates are expected to come down because the economy is taking strain. And this whole year, 2024, was a wait and see. And it was all about interest rates. When are rates expected to drop? Every time there was an announcement of, there's hit, then what we saw is crypto prices would boom. Because now it's more attractive for investors and for holders to look at something like Bitcoin, which doesn't necessarily generate interest, or at least it didn't if you were just trading it. You can through like staking in it. And for example, for gold and that, when interest rates are high, it's not good for those assets and for stocks. But when interest rates are low, those assets and whatever become a lot more appealing. So we had this trend and this whipsaw, and then I don't even need to tell you what happened here, is because we saw that shift in fundamentals, and now this was the election, and that was the Trump win. So this is pretty much all the fundamentals explained in one chart. Does this help us? In a way, I guess it can prepare us. Well, it does help identify cycles and that. And then we could also, my lovely Fibonacci, which you'll know that do enjoy Fibonacci. And now we can use, because before the Fibonacci would have been from the November 2021 high to 2022, and that would have set some zones of support and resistance to look at future trends. That's been violated. So now we are now at a new stage in the cycle in our whole expectations. And this is when we now go to shorter term timeframes. So now if we're taking the 2022 to 24 move on the monthly, we can see this period is still a consolidation zone. Not because remember, we're taking the recent move. So we can't use this for long term until prices, for example, now the 96,440, the 14.4% retracements of that move can be used as support. Okay? Because because now the whole thing about Fibonacci and technical analysis is we are now looking at those longer term timeframes. We're using our technical tools to see where prices can go. Because technical analysis, it's not to say history repeats itself, but it's to say it definitely rhymes. So 96, 440, and then we've got the 110, 150. So these are our primary zones. Let's now go to the shorter time frames. Okay. We are now going to go to the weekly. just to get more levels and more percent. So once again, from the weekly chart, so this is the gap I was talking about earlier, where you see that 6-month moving average is almost at the same level as where that gap where markets opened, and that was the 11th of November. So this now becomes an important zone as well if prices actually fall below the 90,000 level, or actually if they break below the 23.6% retracement of that move. Okay, so we've got 90,000. That's a big level, psychological level. Then we've got on the downside this move here. Is the bull trend still intact? As long as this is still validated, the short answer is yes. Okay, but now once again, there's a difference between trading and investing. What we could even do here is we could take the weekly highs, and so we start taking the ranges. So we look at the high last week. Well, basically we had that 110, 150. Okay, what was the low? 99,745. Okay, 99,745. We could even, once again, next to that. Okay. And so as long as prices stay, so for short term, this is actually my would be resistant while support. But yesterday, we already had a break of it. So yesterday's low now becomes imminent support, and that's at 97,650. Towards the upside. Now, if we look here, at the moment, this doesn't have an upper wick. So we can see it's a low body, but the fact that it doesn't have an upper wick is saying that, okay, prices have got there, but have been pushed down. Once again, we need to look at a shorter time frame. So let's take our current weekly range. So we've got 97,750, and then we have, there we go, 104,695. Okay, make sure that's in our layout. Perfect. Actually, I might as well just go. Now, when we're looking on the daily time frame, we're now seeing, okay, so if we are trading this move, what we can see is those barriers from yesterday, they're still holding the imminent move. But we start seeing, okay, what clear lines of price action can we actually see? We also look at volume. We can see volume already last week. Volume was increasing, and that was in the build up. That was already Trump tariffs and everything. And then that announcement of the Stargate, although that was on Wednesday. So we see that volume was still favoring the upside. Okay, here we see rising volume with a decrease in prices. And especially yesterday, we saw a drop in prices that was also volumes known as a confirmation indicator. So when, so basically this was to say that move was legit. Okay, but we need to also take into account other factors such as the futures contracts are going to expire and so forth. And then we have that whole China-US trade war. Even though it impacts tech stocks, the China-US trade war, obviously now with Trump saying he wants to create a crypto reserve, this is where all the fear and that also came in. So we saw a lot of institutional adoption, and even last week or the previous weeks, for example, here, when we saw prices briefly break below 90,000, we quickly saw, if you looked at something like the liquidity map and if you looked at options contracts, you saw that the whales quickly snatched things up, and this is why there was such a swift rebound in prices. One of those biggest whales are MicroStrategy, and they've just been piling into their portfolio, especially when markets are on a break, or like yesterday when there's a sell-off, then they're basically buying the dip. So we have to be careful about that. So as far as today is concerned, or now, we have those clear areas, but this is a big zone. So we don't want to trade this zone because this will be like chaotic. Okay, this is more for like swings. So we can look at other things now, such as if we look at this time zone, or basically on the 7th of Jan, we see on the 6th, there were prices that was 3.53% move, and then we saw 5.63% decrease. So once again, we can see, and this completely, so basically this is a bearish engulfing because it fully engulfed the previous candle. So we had those positive days, and then we had basically a pullback, and that wiped up those 3 days of gains. We then had that rebound, and that drove us to those highs. So now we're getting a new balance. So we can see for now, actually, if we look previously, bulls have tried before to get past this level, that's 103,685, and they failed. So now that we're trying to get past there, do we need to clear this level? Yes, we do. We need to clear this level and gain bullish momentum, and then we would be able to get to 105, which is the next key psychological level, and then potentially a move higher. For the downside, now we look at today's range, okay, and we look at the low of today, and that will be 101,275. Okay, so this is our daily range. So 101,275, 103,685 is resistance. I'm sorry, our daily range today would be the 103,505, which is today's high, which we could also make. Okay, let's say we wanted to make that a resistance. So we want to trade between this range. So this is one candle, and now we can start going into shorter time frames and using those other indicators. So if I wanted to trade this range, what I would do is, if I wanted to go long, already I would use the low as if I was scalping as support. So my support level would be 101,275, and then my immediate resistance level, or even short-term take profit, 103,380. But to get more or a deeper insight, we would go, okay, let's go 4 hours now. Okay, 4 hours. I'm going to take off the volume. I'm actually going to take. I did something. Yeah. Okay, never mind. Okay, so now what we're going to do is we can see we've got those new areas. So even shorter. So this is our daily range. Let's make these colors. Actually, let's change it. All right. Okay. Now what we can do here as well is we can say, okay, fine, we've done this long Fibonacci, but you can see short term, it doesn't really have a place. And this is when you can start taking other moves. For example, the 25 Jan, let's take this move and extend it there. Okay. So we see there's another zone, 102425, and that's the 38.2% retracement of that 100 to, well, basically the Jan high to now the the Jan low. Let me see. No, not. I'm sorry. The Jan high, well, 20 Jan high, and then this was to yesterday's low. Right, so we can see another zone of support coming there and another zone of resistance just above. Well, it's basically the 50%, and that's at 103.90. Okay, now this starts to get a bit messy. So we are going to get rid of some of these. So we're not going to get rid of them. We're just going to hide them temporarily. And then which ones aren't really 23, 14. Okay, so here we've got a zone, a bigger zone that we can play with. So for example, if I wanted to do a short, I could go 102.425, set an order, and then basically on the upside, 103.505 would be my stop loss, and then we could have a take profit at 101.210. It depends on your strategy. Or this could maybe be like a swing or a longer time frame. You see at the moment, currently 4-hour chart, it's still very much suppressed, and we've got an even tighter range at around 102.970, and then in that 102.425 zone. So short term, now we're looking for a build up, and we're looking for one of the players, either bulls or bears, to gain traction. So these could be our zones, and then we could also use other indicators. So this is how I would use my long-term indicators, such as the Fibonacci, and I showed you on the weekly time frame. And then here is where we then go, okay, fine, I've got my time frames. If I wanted, I could even go a shorter time frame, 1 hour, okay? And then it depends if you're scalping or whatever. We could even take another move, such as this one, and do the same thing, and then see which ranges we want to go for. Currently, as I said, we can see that there's a zone, and to me, this zone, the fact that it's been retested 3 times and it hasn't been broken, and this is the hourly, tells me that this resistance is huge. So to me, for the upside move, I wouldn't open a long position until this move is broken, or at least this level. On the downside, we're not getting clear conviction just as yet. So it would depend how much risk you're willing to take. If you wanted to take a like range, then today's range, this would pretty much be my scalping range. I know I'm out of time again. Okay, Ethereum, I did my charts super nice, and then I redid everything. So with Ethereum, the daily, now here what I used is also, okay, yes, looks very messy, but there's a lot that we can take out. With regards, what zones are these? I'm just going to actually delete this. Okay, so we also have our long-term, these are also the Fibonacci's, and then we've got the Bollinger Band. So I'm not even going to use the Fibonacci's or anything. This just looks really messy. Well, basically, the 23.344, that would be resistance, okay? And this comes from a historical, so basically that comes from a recent all-time high there as well, which is actually, well, it was December. And then it goes from, yeah, this is our long term. So this would also actually be that 2022 to 24 move. Okay. But now, because this is messy, I'm just going to do this. Now, on the time frame, well, basically for Ethereum, to describe the price action here, we just see, for example, we also had this. So we had this pullback in price, or this steep, like the drop. Okay. If we look here, this is the lower band of the Bollinger Band. Now, what is a Bollinger Band? For those that say no, technical analysis doesn't have a place, then does statistics not have a place either? Because a Bollinger Band is basically a standard deviation. So 2 standard deviations above the 20-period moving average, 2 standard deviations below. So this is the 20-period moving average. And we can see there it's also provided quite a nice zone of resistance, over the past few weeks, or, prices have been flirting with it. They managed to break below. Yesterday broke below temporarily. It's below that Bollinger Band, and that is because there was so much volatility. So this is the measure of volatility, and when prices came down, that is basically to say, okay, prices now, there's a lot of selling pressure. It's actually broken the lower band, so it's not within the normal range. And that does, as you can see here, it did contribute. It's not to say it's safe proof or it's infallible, because no technical indicator or nothing's infallible, but it is to say that it does assist in providing some zones that you could also use, basically as a guide. If I wanted, I wouldn't go as far as to say, okay, this level for a short, but what I could do is I could say, okay, let's look at where the Bollinger Band is, and at the top here, we would see there, okay, so 3114. So now this I could use as imminent support, and then on the top side would be your 40, your upper band is at 3439. So that could be resistance. But here again, if I'm wanting to open along, I first want to see confirmation using that 20-period moving average as my first level of resistance. And then we could look at this level, the 23.6, another big zone. So overall, I would want actually confirmation that prices have broken above here, and then we could look at some upside potential. You could use this though for intraday, once again, if you're going to something like the 4-hour chart, and then we could look at that 20 zone. We can see the prices are still below that, and if you wanted to, for example, take a short, we could put a stop here at 3214, and then we could go as far as even to put, well, basically make this as our take profit. It just depends on what your strategy is, how long you're actually wanting to trade it for. Then, okay, quick, I don't even know if I've got time. I probably don't. Once again, let's go to. Okay, this is going to be the last thing. Now, tomorrow we're going to cover, I'm going to talk about the Fed. I'm going to also talk about those earnings in more detail and what we can expect, or how we can expect that to actually impact cryptos. So let's have a look. Let's wait and see, and let's see how that goes. But overall, we can see now Apple has basically gained. Nvidia, we can see, is still really like struggling, but this is all in the pre-market, so we'll have to see when markets open to see if there is actually a change in rhetoric. But this does all, if you can see, it does definitely impact the whole index, or especially the US market. So here we go. So we see there's still a lot of red on the screen, but there's, a little bit of optimism with regards to Apple, with regards to some of these stocks, and we've still got earnings. So I'm definitely keeping an eye out on what happens in the US session, especially with the tech sector, and then I'll catch up with you tomorrow. Thanks for joining. Bye-bye.